we have a multiple based on, you have the multiple and then you have the underlying earnings. When both of them go south, it's just horrific for investors. I don't know whether it's as horrific for early stage guys like you, but that's what we're seeing, isn't it? The multiples contracting and earnings are going down, which makes for 80% drop in valuations. Hideous.
Yeah, the volatile nature of what's happening in consumer spending right now is having a ripple effect through Snap and all the other social media stocks that are online advertising based. I think it's probably a smart idea right now to go to higher ground, focus in on core technology companies that are integral and core to small, medium, large size organizations, even consumers. Zoom, Microsoft, Salesforce, Amazon, AWS in hosting for startups. These are not names that we've been talking about, but with valuations coming down, they actually look like higher ground right now for technology investors. Whereas in the online advertising-based space, who knows? Consumer spending looks like a mixed bag. There's multiple signals out there with Snap and retail consumer spending signals also down. So we'll see over the next quarter.
Did we all sort of get hypnotized by the aura of the pandemic in all these stocks that they were going to grow forever almost? And now the consumer spending wasn't gangbusters during the pandemic, was it? What got these stocks to these valuations? Why did we think it was going to last forever, Steve? And why would the return to normalcy be the death knell for these? I guess people go back out. Maybe they're not sitting on their screens, but it's just, I don't know, it's the madness of crowds once again that I think we're seeing.
Well, I don't know if I agree with that. During the pandemic, I think on the higher end segments, consumer spending did go up, but I think a lot of what was happening with stimulus, supporting a lot of the economic growth and the stability at that time, I think we just got out over ahead of our skis there in terms of valuations, and so we saw cloud and SaaS kind of get hit first at the end of last year and Q1 of this year. And I think it actually looks quite interesting right now. But that's a shorter term view. Longer term, I think it's smart in the technology sector to stay focused on the long term right now. That's what we do in early stage venture. We invest for the 5 to 10, even 15-year outlook on early stage core new technologies. So I think stocks like Coinbase in the crypto and Web3 area, I think Asana in the collaborative project management space as well, cutting into Microsoft's business. I think those are great long-term bets. Those are where the younger generations of companies and employees are focused, as well as consumers.